Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 9th of March. All right, now, just before you adjust your screens there, these are real. We're seeing a bit of a meltdown across the board on a number of pairs. The US dollar is, at the moment, it's doing a number of different things against a number of pairs. But check out the Asian equities here, down almost 6%. That's going to be reflected across the US sort of futures. You're going to see a massive sell-off today. There's a number of things coming into play, and let me just give you across to the news sort of stuff. So what we're seeing is a bit of a meltdown in global bond prices, right? This is very reminiscent to the global financial crisis where things start free falling. So there's a huge liquidity issue on bonds, and there's some important bond auctions this week. US 10-year, 30 years, Thursday, Friday. You got UK bond auctions and Euro bond auctions. So it's going to be pretty important. This is where, liquidity stems from, and stability is the US, or particularly the bond market, but US treasuries. They are at the moment sort of nosediving as well. So we're going to keep our wits about ourselves. And if I just come back and just give you a look at the overall news, now there's a number of different things impacting. Okay, so oil has dropped 20%. Or it's actually now over 30%. So there's been a rush to safe havens. Dollar yen has dropped from 105.50 where it closed on Friday. It's been down below 102. It is looking very loose. Gold's up above 1,700 for the first time in 7 years. You've got the coronavirus generally banging away there as well. There's multiple issues. So let me just come across and give you a look at the currency pairs. They are an absolute mess. And if you think it's easy trading, it's not. Spreads are very wide and the movements are very fickle, right? So looking up here, Aussie was sitting around 66, about 15.20. It's been down well under 64, down around 63 and a half. And it's currently back at 65.20. Same sort of move in Kiwi. So this whipsaw price action is going to be around, I'd say, throughout the Asian day. And I don't think it'll be this loose coming into the European, North American sessions, but this is going to be a massive flush out. As I said, we had a gap on the open in the Swiss and the yen. Here's the dollar yen closed Friday. As I said, it's been down under 102, back up to almost 103. It's flying all over the place. Euro up to 114.5. Okay, we got the ECB this week as well, and sterling also ratcheting to the top side. One of the biggest moves was oil, which gapped $10 on the open. This is where it's dropped 30%. Dollar CAD all over the place as well on the back of that movement. So what we're seeing is this is like day-to-day trading during 07, 08 when the global financial crisis was at a peak. So don't think this is easy, right? Your stop-loss limits have to be massive to stay in the game. It's not worth, to me, throwing your cash around in these sort of markets. The dollar index, well, it's down, but it's not massively gapping at this point. We are seeing dollar yuan, the yuan up and down about 300 to 400 or 500 points as well. So there's no real harmony there on that sort of pair as well. So just having a look at the currencies now, you're going to start to see some central banks getting involved here. The Aussie down 2%, okay. Kiwi down 1.46%. Euro up 1.23%. Swiss down 1.43%. The yen's down almost 3%, right? This is chaotic. The central banks need to step up, and you're going to see, I reckon you're going to start to see some intervention. It may be subtle to start with. As you can see, the Japanese equities, the TOPEX and the Nikkei down over 6% now. This is starting to get really loose. As I said, you got to expect, if I just come back to that risk on, risk off page, to really anticipate massive volatility. Now, this isn't just one direction. If it was one direction, it'd be easy. But so just watch what you're doing when you go into the markets. If you look at the say equity markets and the impact on specific currency pairs, Euro is correlating extremely high, inverse relationship, obviously, to the US equities. So keep an eye on that. The equity markets are in general control at the moment, right? So this is where trading gets extremely loose, is when you're trying to work out where the direction is and you can't nail it. Now, if I just bring you back to the US page, I mean, just having a look, this is where and this isn't actually updated in real time, but if I give you a look at the US Treasury yields, this is where the problem is, right? So these US 10 years were up around sort of 1.5% a week ago up here. Now, look at they're plummeting, right? The 7 years as well, 30 years as well was up here as well. So it's going to put a huge amount of pressure on the central banks, on the governments. I mean, this is a major issue for investors. Investors will be like, let's get out of the bonds. These things are collapsing. And that's where you're going to see that massive push into dollar yen, dollar Swiss as we move forward. So what's my advice? Well, take it easy. If you think there's dollars in it, sure, have a look. But just check out the current market conditions. They are poor. This is poor trading conditions. Low liquidity, high volatility, and whipsaw price action, right? It's very hard to even stay in the positions. What are the market drivers? Well, the coronavirus was the catalyst. It's impacting global equity and bond markets, Swiss, yen, and gold, the safe haven trades. We've got US treasuries sinking and oil plunging, right? These are multiple events impacting multiple currency pairs. So if you think you know where the direction's coming from, you probably want to think again. From Friday, I've still got the pairs that were a strong sell. This just seems to have really come about, dollar Swiss and dollar yen, obviously. Now, the other pairs on the watch list, this is all geopolitical, so it's not easy. All the other pairs are basically, to me, wait and see. Of course, dollar CAD's going up, dollar euro's going up, and sterling's going up, but there's no real clear entry levels, and there's no, like, where's direction? Can you nail it? Not really with these geopolitical events. As I said, you're going to start to see a lot of central banks, especially in the European, North American session, start to really spark up. I wouldn't be surprised if you start to hear them start talking now, or even potentially cutting rates ahead of the meetings. So just having a look here, central banks last week, we saw 3 of them cut rates. We've got the ECB this week. You want to have a good look through the data here, because we've got a lot of data coming out, but it's going to be really plagued by the geopolitical side of things. You know, Chinese CPI generally would have been a really cracking opportunity. Well, to me, it's going to be a wait and see. You come back down here, we've got US CPI numbers. Now, this is an epic number to be sort of looking at for fundamental direction, but this is probably going to be superseded by all this craziness. In particular, as I mentioned, the bond auctions, they are going to be very important this week. I think that 30-year is on the Friday, so I'll just update that. But then you're going to find the market's very fragile, and there's data in here that you usually wouldn't see, like the Italian employment numbers. Any raw nerve in the market now, especially around consumer sentiment, university consumer sentiment at the very end. We've got the ECB meeting coming up as well on Thursday, so keep an eye out for that. That's going to be, as I said, they may do something ahead of that. So anything to do with consumer sentiment, or confidence, okay, NAB confidence here. You got Westpac consumer sentiment confidence. This is the Aussie numbers, obviously, are going to be very important. So what do we do? Well, to me, if there's extreme volatility, it's not a real chance to get into the market with any sort of clear confidence. I probably will just be watching at the moment. But if you think you're going to be trading, I'd decrease your trade size, give yourself a bigger stop to try and stay in the game. That's the only way you can trade through this situation. My experience through 07, 08, stay out of it, right? You see currencies do 200-300 points in a day. That is not easy. It's very loose. As I said, you put an order in the market, you could be stopped out at the same time you put it on, because the movement and the volatility, there's no liquidity in the market. When there's no liquidity, huge volatility, wide spreads, it's not good trading. All right, so keep an eye out for the data as it comes through. There's a bit of well, there should be some activity in the European session. As I said, the fundamentals here go out the window when there's extreme volatility, and when the geopolitical drivers, like the US treasuries or global bonds for that matter, coronavirus and oil plunging, these are 3 extreme events all out there at the same time. It's crazy, right? So just be aware of that. Other than that, we've got a big week of data coming out. So ideally, I was hoping things would settle down. It doesn't look like that's the case at the moment. All right, so that's it, guys. A bit of word of warning. Just try and control your appetite. I mean, as we go through the day, I mean, you're probably watching the Asian equities as a bit of a benchmark, down 6%. I mean, I can't wait to see what the US equities do when they open up. It's going to be pretty huge. All right, guys, have a good one. All the very best. Cheerio.